Another flood, really, of Canadian banks reporting results, RBC and CIBC among them. I want to bring in Paul Harris, one of our longtime BNN Bloomberg guests. He's portfolio manager at Harris Douglas Asset Management, to talk a little bit more about the takeaways here. You know, before I get into the bank numbers, Paul, I mean, what is your reaction to the U.S. president jumping back into the mix to create fresh uncertainty here?
Right. So I think the issue for me with all this stuff is this kind of, it's so volatile, right? You just don't know. Like, it's March, April, now it's March. So I think it's just this inconsistency of all these details. And I think that's what makes for very difficult, not only sort of managing money, but if you're a company or a corporation in the United States or Canada or Mexico for that matter, you just don't know what to do. Right. Yeah. So that, in my view, creates a real problem, because the reality is that you will do nothing. And that's sometimes just as bad, right? Because you're not going to invest, you're not going to maybe make an acquisition, you're not going to do any of these things. And so, because you just don't know how it's going to affect you. So I think that creates a problem for everybody concerned, right? So if you know there was going to be tariffs, yes, you will deal with that and you'll set up you'll deal with it going forward. But if you don't know all those things, it just becomes a much more difficult way of making a decision for yourself. And I think that's really hurts a lot of businesses, and I think you'll end up seeing that, if this continues, an impact on the economy.
Yeah,
right? Not only Canada, but the United States as well.
And for the banks themselves, who are in the business of facilitating commerce, right, that's something to watch. Certainly, a lot of the analysts have been asking the banks about the tariff uncertainty. But as we go through the bank earnings themselves, let's start with Royal Bank, because it looked like their deal team was quite busy. It looks like their capital markets business was flourishing. What's your assessment, just starting with the bank earnings with Royal Bank?
Well, Royal, I think, just sort of kind of hit every metric, right? So the HSBC was working out incredibly well for them. If you look at the P&C business, it was good loan growth on every aspect, not only on the commercial side, but on the retail side. Investment banking did very well for them. Even asset management did well. So I think they hit in every aspect of every metric that they have, or every business they have, they did really well. Yes, loan loss provisions went up a little bit. I think that's pretty natural. I think this issue that they, maybe they have to bring it up, but every bank, if you looked at their reporting, they all brought up this idea that they're cautious about what's going to happen in the United States, right? They're worried about these things. They're worried about from their client perspective. They're worried about their own banking perspective. I will say one thing, though, that that will help banks in general, especially ones that have a U.S. presence over the next little while, is that deregulation on the financial services side will really, helps all banks, but will help Canadian banks because they do have a large presence there, and on the capital market side as well. So, the one thing about capital markets is that is really important is that you need volatility. The volatility in the Canadian dollar, the volatility kind of helps them because they get this kind of, there's a bid-ask spread, it widens out, they kind of make a lot of money in the volatility side. I think there's a greater expectation, I think, for a lot more M&A to be done this year. I think that's what more people were talking about, because they feel that the regulatory environment will change. But I think people will be more cautious about doing a deal if they don't know what's going on with the tariff environment and all these other things. So I think that aspect may be slightly different than the expectations are. Maybe later on in the year will be fine, but I think presently, it's going to be very hard for you to go to your board and say, I want to go buy something, and with so much uncertainty going on. So I think that aspect of capital markets may be a little slower than people think in the first half of the year, but maybe in the second half will be better. But certainly just general trading and all those things should do well, much better.
Well, that seems to be one of the reasons why CIBC, by comparison, had a pretty strong quarter.
Yeah, that's right. So even CIBC, they all did very well. The exception of TD, which TD really had a much larger, there was some negative leverage because their costs went up, right? But I think, CIBC is a similar thing where they kind of, on most metrics, most of the businesses, they were doing very, very well, and capital markets did exceptionally well for them. So I think CIBC and Royal did not increase the dividend, TD did, but I think that, and TD is in kind of an awkward situation. They probably felt that they needed to do something like that because of the other issues that they're dealing with.
Yeah, can you elaborate on how you feel about TD as an investor at this point? I mean, I think our regular audience is well aware that they are dealing with serious headaches in the United States, and that has influenced everything from, broad strategy going forward to who ultimately became CEO
Right.
and the moves he's making very quickly.
Right. So I think we've owned TD for a long time. I've talked about it on the show for a long time.
Yeah.
So I think this is an opportunity for TD. So one, if you look at TD's franchise on the Canadian side, it's always done very well. The U.S. franchise this quarter did poorly, and I think it will continue to do poorly because I think although they have a great franchise there from a brand name perspective, what they don't have is the return on capital on that business has never been as met expectations. So I think they really have to look at these businesses, see what is not working, what they're not getting a great return on, and exit them. And they've started to do a little bit of that. So I think that has to be done more aggressively. In some ways, I think that this is an opportunity for TD on the side that they kind of, the AML side, where the money laundering side, they can really improve technology. They can show that they're one of the top businesses, banks in dealing with risk management. So they have this opportunity to do that. And I think that they have an opportunity, because they're not doing acquisitions, to actually analyze the franchise and get rid of the non-core businesses and really concentrate on growing them.
Great analysis. We're almost out of time, but among all the banks, now that you've gotten a fresh look at most of them, we spoke to the CEO of Scotiabank this week as well. Do you have any preferences as an investor?
Well, so in our dividend portfolio, we basically own all of them because they pay a dividend. Right. But in our core equity portfolio, we own the Royal and the TD. And I think Royal has just been exceptional. I mean, I was hesitant about why they bought HSBC, but it's worked out incredibly well for them.
All right, Paul, appreciate it. As
My
always,
pleasure.
great perspective from Paul Harris.